Hi there! If this is your first time stepping into the world of cryptocurrency, welcome. I know it can feel like you've just walked into a high-tech jungle. Everyone's talking about Bitcoin, Ethereum, Solana, Dogecoin, and it's hard to know where to even begin. So today, I want to sit down with you and have a real, honest, and easy conversation about one of the most important basics. What's the difference between Bitcoin and altcoins? If you can understand this, everything else in crypto becomes a lot less overwhelming. Let me start with a quick story. Imagine you're in a small village where everyone uses gold coins to trade. Then one day, someone invents a new kind of coin. Let's call it BitGold. It's digital, limited in supply, and no one controls it. Over time, people realize BitGold is valuable because it can't be copied, inflated, or manipulated. That's Bitcoin, the first, the original, and the most trusted. But then, new villagers start creating their own versions of digital money. Some make coins that are faster. Others make coins you can program to behave in certain ways. A few even make joke coins that become popular just for fun. These are the altcoins, short for alternative coins. So in simple terms, Bitcoin is like digital gold, scarce, secure, slow, but solid. Altcoins are the creative cousins, each with a different use case, speed, or idea behind them. Why does this matter to you? Because if you're investing your hard-earned money, you want to know what you're buying. You want to understand the difference between something built to last and something that might just be a shiny trend. Let's break this down step by step. Now that you get the idea, let's talk about how to safely explore the crypto space without getting overwhelmed or burned. 1. Risk management. Crypto is exciting, but it's also unpredictable. Prices can jump 50% in a day and crash 60% the next. That's why managing your risk is non-negotiable. Use a stop loss. A stop loss is an automatic sell order. For example, if you buy a coin at $100 and set a stop loss at $90, your position will automatically sell if it drops to $90. This helps protect your money when things go south. Diversify. Never put all your money into one coin, not even Bitcoin. A beginner-friendly portfolio might look like this: 50% Bitcoin, stable foundation, 30% Ethereum or other big altcoins, 15% smaller projects with real potential, 5% for experimenting with meme coins or newer tokens. That way, if one fails, the others can balance it out. Dollar cost averaging, DCA. This strategy means buying a fixed amount of crypto regularly, regardless of price. For example, $50 every week. It takes emotion out of the equation and smooths out your entry price over time. Even professional investors use DCA to avoid buying the top. 2. Tools you should know: CoinMarketCap and CoinGecko. These two websites are your starting points. They let you see coin rankings, price charts, market caps. Check how a coin performed over time. Explore new coins. Find links to official sites and communities. TradingView. Even if you're not into charts, TradingView lets you understand where support and resistance levels are, whether the market is trending up or down. Indicators like RSI shows if something's overbought or oversold. Start simple. You don't need to be a pro trader to use it effectively. Glassnode, on-chain analytics. Want to see what big investors, aka whales, are doing? Glassnode shows how long people are holding Bitcoin. When coins are moving off exchanges, usually a good sign. Whether people are taking profits or holding, it's like looking behind the scenes of the blockchain. 3. Where to learn and stay safe. Follow reliable news. Stick with sites like CoinDesk, the Block Coin Telegraph. Avoid random TikToks shouting 1000x coin. They're usually pumping their own bags. Join communities. Try Reddit's r cryptocurrency. or Telegram groups. But be careful. Never share your private key. Never click links from strangers. Always verify project announcements on their official websites. All right, let's wrap this up with a clean summary and some parting guidance. Recap: Bitcoin versus altcoins. Bitcoin is the OG. It's slow, secure, and designed to be a long-term store of value. Think of it like digital gold. Scarce, only 21 million coins. Not owned by any company. No marketing gimmicks, just adoption and trust. Altcoins, on the other hand, are the new kids on the block. Some are brilliant, like Ethereum, which lets developers build decentralized apps. Others are fast and scalable, like Solana or Avalanche. Some are community-driven memes, but not all altcoins are created equal. Some have great technology but no adoption. Some are hyped with no real use. That's why your research and risk control matter more than any price prediction. Let me be real with you. Most people who lose money in crypto do so because they chase hype, panic sell, or overinvest in something they don't understand. Here's what to do instead. Zoom out. Think in years, not weeks. Bitcoin went from 0.01 to $69,000. Not in a straight line, but over 12 plus years. Stick to your plan. If you've set a strategy, DCA, diversification, stop loss, follow it. Don't get distracted by every new token on Twitter. Keep learning. The crypto space changes fast. New projects, updates, and tech are always emerging. The more you understand, the less likely you are to make decisions based on emotion. If you've learned something today, here's what I recommend. Subscribe to this channel. I share crypto tips every week, made simple for real people. Join our Telegram, a safe space to ask questions, share strategies, and learn together. Download my free beginner's checklist. It's in the description, and it will save you hours of Googling. Comment below. Let me know. Are you more interested in Bitcoin or do you prefer altcoins? Crypto is more than just prices going up and down. It's about the freedom to own your money, access new technologies, and join a global community. Whether you decide to hold Bitcoin, explore altcoins, or just keep learning, you're already ahead of 95% of people who never take that first step. Thanks for being here. Keep going, keep growing, and I'll see you in the next video.